السلام عليكم ورحمة الله. بسم الله والحمد لله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 12th of January 2025. I'll be doing another weekly review, starting with the XY. Here we have the weekly time frame chart. As you can see, price has continued running up higher, traded above the monthly favorite gap here. This is a monthly favorite gap. You can go to your monthly time frame to check this favorite gap. But we have here on the weekly time frame chart, we have this weekly favorite gap. So price could be reaching towards the candle's low, which is the weekly favorite gap high. Before it retraces down lower, we have this favorite gap, and the price has been building sell side liquidity below it. As you can see here, the previous 3 weeks we've been building sell side liquidity just above this favorite gap. So it's a good area to look for price as a means of drawing liquidity. That price could be retracing towards it as means of an internal range liquidity. If price closes below it, it means that we could use it as an inverted favorite gap to run even lower towards the sell side liquidity. Going to the daily time frame chart, this as we said, like we've been building sell side liquidity here. You can see relative equal lows here, right there. So price could retrace down lower, take out the sell side liquidity, reach to the internal range liquidity, which is the weekly favorite gap, and we have a daily favorite gap here as well. Before it continues, if it wants to continue running up higher, but here all I'm seeing is price might run up higher here towards this high. If we started seeing some pretty much reaction here, that price wants to trend down lower, we have this favorite gap here, this busy. We're including this volume imbalance because this is how you annotate a favorite gap. That could price that we could be looking and monitoring price how it trades at this favorite gap. If it's showing any resistance, if it's showing any support here, we could be looking for some longs towards this level. If we've seen price just close below it, then we'll be targeting these lows right there. What I've been showing you here in this review here and on the XY, it means the quite the opposite. It's diametrically opposed in Euro USD and Pound USD. So I believe that's gonna be pretty much it for DXY. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see price has traded down lower, took out the sell side liquidity. We're still in the monthly favorite gap right there. We're pretty much we touched the constant approximate or the midpoint of that favorite gap. From here, you can see how price retraced up higher, all the way up here, and then pushed down lower to take out the sell side liquidity. I'm expecting some kind of a consolidation, seek and destroy going into next week. That's what I'm expecting going into next week. So going to the daily time frame chart, that will be my low hanging fruit objective. This is small CB, small favorite gap. This is what I'm going to be targeting going into next week. If price was generous enough and the market is generous, I'll be looking for these kind of buy side liquidity to be targeted, and as well as this favorite gap. So that's what I'm going to be looking at. We have a weekly, no, we don't actually. It's just this daily favorite gap, and above it we have these relative equal highs that are inside this CP right there. So this is what I'm looking at as means of a very low hanging fruit. Now, price could just be tanking down lower opening next week, but this is what I'm looking at, and this is what I'm expecting next week. So that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see how Pound USD is just animated to the downside, tanking down lower, took out this sell side liquidity, took out this sell side liquidity as well here. We've seen a retracement here, pretty much clearing out any potential favorite gap or any potential internal range liquidity. You can see from this run right there, all the way here, there is not pretty much any internal range liquidity. Now we look at the main threshold of that premium wick as means of an imbalance, an internal range liquidity, because there's a favorite gap here if you zoom into the daily or to the hourly time frame chart. So from here, if we'll be looking, if price wants to continue, and we're in a sell program, you don't try to catch the bottom here. Price, we're looking for price to continue running down lower to take out the sell side liquidity. Going to the daily time frame chart, that's the area where we have the constant of that uh, premium wick. Now, in every constant of premium or discount wick, you will see a bearish order block or bullish order block. In this case, it's a bearish order block because it's a premium wick. So in every premium wick, the midpoint or the constant contract of that premium wick, you will find a bearish order block. That's every time you'll see it, regardless of where you see it. But wherever you see that kind of a phenomenon, you see a bearish or bullish, depending on the wick. If it's a bullish, if it's a premium wick, as I mentioned, you'll see a bearish order block. If you see a discount wick, you're most likely gonna see a bullish order block. So in this case here, the price took out the sell-side liquidity as means of an internal liquidity that will be aiming for something like this SIBI right there. There's a lot of levels. This is a daily favorite gap. You can go back on the chart, you can see it. I think I've already showed it to you in the previous weeks, previous reviews actually. We have this favorite gap that price retraced to, and then with a bit of a drawing here animated over the lines here, but then nevertheless, it traded down lower and took out the sell-side liquidity. From here, price could be retracing up higher into some kind of a favorite gap here, this favorite gap, CB, gathering some liquidity and internal liquidity, and then tanking down lower to the downside. We have the sell-side liquidity at the 1.0697 level. You could be looking at that level for price to reach towards. So I think that's going to be pretty much it for pound USD, or also known as the cable. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see ES has swept the sell side liquidity right there, as you can see. A bit of a consolidation here. It took out as well the low of the candle right there, this week's candle. So from here, I'm expecting price to just continue pushing down lower into the sell side liquidity here. We took out previous week's high and we took out previous week's low. So we might see some consolidation here that can take out the high and then jam down lower towards the sell liquidity. But regardless, I'm looking for some kind of a lower prices attacking this sell liquidity at least. That's gonna be like my low hanging fruit right there. So going to the daily time frame chart, you can see relative equal lows. We have relative equal lows right there, equal lows actually. Price started up higher from the equal lows here. Bit retracement here to that favorite gap and continuing running up higher here. Going into December, we've seen some kind of consolidation here. Price took out the buy side liquidity and then jammed down lower. We had this favorite gap that has a liquidity void right here as well. Price retraced to it. I called it out if you remember, and we had this favorite gap that I called out. And I told you if price traded down below it, I'm gonna be looking at it as a means of an inverted favorite gap. Price did close below it, and it has created another favorite gap that's overlapping to it. So we have a balanced price range from this candle's low to this candle's low to this candle's high, because it encapsulates the bigger or larger area to be annotated. So because this candle's high is higher than this candle's high, so we'll be looking at this candle's high to encapsulate a bigger area to be in towards that in that balanced price range. So price did retrace here on Monday, Tuesday, Wednesday, Thursday, and Friday. Friday traded down lower, took out these relative equal lows, and took out this inside liquidity. Now the next algo to be looking at this favorite gap. Price might retrace here. Going to next week, we have a small favorite gap right there. Very small favorite gap. Price might retrace towards that favorite gap, but pretty much I'm not expecting price to retrace all the way up there. It might see some reaction here at this level, which is the midpoint of that discount wick. But now since we're below it, that's going to be considered as a premium wick. Don't mimic everything I say. No, it must have value, it must have meaning while you're pretty much looking at specific things in the chart. I'm looking at specific things at the chart, and I'm trying to call them out in the right way so you can learn them the right way. I'm not trying to pretty much mimic those. These are not patterns that I'm showing you. It's pretty much the highs and the lows and the inefficiencies in between the highs and the lows. I'm not doing anything crazy here. All right. So the lows here, I told you this low price traded down low. We have a balanced price range as I've mentioned, price retrace to it and push down lower. Here, as I told you, price might retrace up higher here we might see some kind of a reaction here that can push price down lower. Price might not have that retracement. So going into next week, all we're expecting is lower prices. Price might trade up higher. It's fine for it to trade up higher. It's not our concern. You just try to look for opportunities for you to go short. That's it. And this is not a financial advice by any means, by the way. It's just me pouring my experience, pouring my opinion in this channel. It's just like a legacy for me to leave on the internet. That's it. So I think that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. The same thing is mentioned here for NQ. Now, if price wants to trade down lower, NQ would be quicker to the downside compared to ES. This is what I think that's for sure. We closed below that weekly favorite gap right there. So expecting some kind of a reaction at the midpoint or the consequence of that favorite gap that could pretty much push price for it to tank down lower into the sell side liquidity. Going to the daily time frame chart, you can see that the midpoint is roughly the low of this candle. I forgot to extend it, but you can go to your chart and you can extend it out in the future. You can see that the midpoint of that weekly favorite gap, now it's considered inverted favorite gap since we closed below it, is has the same this candle's low is the same as the midpoint of that favorite gap. So I'm expecting if price wants to retrace up higher, it might fill this gap and immediately rebalance here. That then we can see price repel down lower to take out the sell side. We have sell side liquidity right there. We have the sell side liquidity here. Small favorite gap right there. Price might reach towards. We have this sell side liquidity, and below the sell side liquidity we have this busy, this favorite gap. Below we have this sell side liquidity. So that's what I'm looking at here regarding NQ. I believe that's gonna be pretty much it for this weekly review. If you have any questions, don't hesitate to ask those questions. I'll be more than happy to resolve them as soon as possible. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.